What's up, everybody? So today I just want to do a quick video, kind of talk about what happened today, a little bit. You're seeing it right now. Everyone's talking about it right now. Bullard, he crashed the markets. He said some kind of outlandish stuff. So we're gonna go over that in just 1 second. You know, this is just I use these charts just for trading, but you can kind of see here, like we finally broke this. We headed down. For whatever reason, there's buyers of the yellow box. I'm new to doing news. I'll put it that way. I do a lot of. Hopefully my mic's not too loud. If you're new to my channel, my main income is trading. It's not YouTube. It's not anything else. In light of all the big YouTubers that just read news to you, I poke fun to them a lot because I call them audibles. All they do is read the headlines to you, and it's because you're too lazy to read or you just don't want to. And I get it because I do the same thing. Why would you? When you have someone just reading it to you while you drive or something. Unfortunately, I kind of think they all suck. If we're just being honest, I don't want to talk negative, but you know who they are. They have something to pitch to you every 30 seconds. The sky is a different shade of blue, which reminds you, you need to get the life insurance. 5 minutes, link down below, which is followed up with 13 other courses. There's always a coupon that's expiring. It's non-stop. Their videos, 15 minutes long, could be summed up to 30 seconds if they cut the ads out. That's how much bullshit's in them. So we want to start doing daily news. While I don't use this news to trade, I do keep an eye on it. I do like to be in the know of things when it comes to just the market in general, the economy in general. So as I look into this stuff, I'm just going to start making a quick video, posting it out here for you. There won't be any sponsors. If there ever is, it's somebody I would literally, it's something I would literally die over, which is why I never did talk about FTX, Binance. If you heard me talk about them, I said they're weird a bunch of times. Anyway, as people choose who they want to follow going forward, my suggestion was just take a good hard look at who you're following. That's why I wanted to kind of just offer this, because you should. If the YouTuber can't live off the advice he's telling you, then he's just an entertainer. He's just a YouTuber. I wouldn't listen to a single thing about it, especially talking about stocks, and he's in the financial world, but then sells you crypto. Like, are you into crypto or are you not? Are you just wanting a link? You've never touched crypto in your life until someone said they're going to pay you. There's a lot of just unfair, kind of weird things, which I still don't put the blame on them as much as some others. There does need to be accountability to the followers. But anyway, going forward, start reading some. I'll read the news to you guys. So I will show the stock market chart. You'll notice there's magic. Yeah, sorry, my group does call them magic yellow boxes. You could probably guess why. But we do use that for trading. So these videos are not for that. I'm not telling you to join my mentorship group. You're probably not a trader if you're watching the news. If you are, you're probably not a profitable one. Anyway, let's get on to it. Because there's a couple things, right? We got J.P. Morgan talking about how there might not even be a recession. And then we got Bullard. He's going ham. He Fed, the rates are at 4%. We need that thing to be at 7, 10, whatever he said. And right now everyone's talking about this Taylor rule. It's a new thing. It's a new term for everybody. So when we're looking at this chart right here, give me just one hot second. I thought I had my screen adjusted. So he brings up this Taylor rule, and we're talking about this right here. And if you want to know the actual rule, here it is. So you got your funds rate, you have your inflation rate. I know I'm looking this way a lot. It's on a different monitor. Anyway, that's how this is calculated. And given the variables you can change in here, you come up with the high and the low. Not like a Bollinger Band setting, but more almost hawkish, dovish kind of setting mindset. There's a lot of things that go on when feds like this talk. There's a lot of posturing that goes on as well. Right now, we've heard time and time again, Powell does not want the markets to rally. Right? He wants things to cool down. If anything happened in 2021, its companies got fat. That's it. They are pre-diabetic. If we don't do something now, we're cutting a foot off. That's where we're headed. I don't know. He wants us to chill out, basically. I'm trying to put this in terms. for everyone to understand. There is if we followed the Taylor rule, we probably would have started this sooner. But you remember Powell saying, like, hey, we're going to run this hot, let it die, kind of flatten out and catch up on its own naturally. That's the route he's taking. And when I say there's a certain level of posturing that goes on, there are certain things that need to be said. If we do start to rally, well, you saw CPI just send the markets up, right? It went nuts. They need to calm things back down. They don't want things going crazy again. But remember when they said we're going to start buying? At that point, they almost didn't even need to start buying because people started buying. So all they had to do was just put that out, put those feelers out, put out the word that they're going to do this. And things happen. The fact that he even said, hey, let's take this to 7. Had algos trading, had people freaking out like, oh, what if we do go that high? So my personal opinion, I probably wouldn't worry about this speech, to be honest at all. I don't think there's any way we do take it to 7%. I bet we do probably run it up to 5, and that's going to be it. I know you saw a lot of people clap back, especially if you're on Twitter, talking about how this guy's just nuts, they're insane. And mostly they run a firm, and they do want things to rally. They do want the bottom to be in. Which, getting on to the next piece, JP Morgan. So I can sum this all up for you. Mild recession in 2023. I think Morgan Stanley even said the same thing. So JP Morgan became one of the latest financial institutions to predict a recession in the U.S. 2023, albeit a mild one, joining banking giants like Bank of America making similar projections, even as inflation in the country has begun to show signs of slowing down. So one thing that all of them are talking about is global recession. Yes. United States, not so much. We might just skate around that. Economists at JP Morgan expect the U.S. economy to contract by 0.5% in the fourth quarter of 2023, with the slowdown dragging further into 2024. The recession forecast is based on a prediction that the Federal Reserve will continue to raise interest rates by a further 100 basis points through March 2023, which would put us right around that 5. The survey also found that fund managers believe the U.S. will escape the worst effects of the global recession, which they predict will have a bigger impact on the Eurozone and the United Kingdom. This would be interesting. Morgan Stanley was slightly more optimistic, predicting the U.S. economy just skirts a recession in 2023, while the job market will continue to see a major downturn. Hopefully they do. I don't want people to lose their jobs. That's never a good thing. But how many, first of all, companies across the board, we're seeing layoffs after layoffs after layoffs. It's not like the hourly employees at the bottom. It's not the ones doing the grunt work. It's the 9 million managers they hired. It's like as things started coming in and started doing good, they're like, you know what we need? More managers, just more people to make more processes so they can just talk to each other back and forth and make it seem like they're doing something good. And they're cutting a lot of those out. I think Google just got suggested they have 187,000 employees. They said you better dial it back. People are not spending ad revenue. So there's a lot of things that I kind of hope they do. And if we're being honest, there's just a lot of lab rats just jumping around. That's what employees are, right? The little lab rats that contain your little cage. And they were kind of running free. There was a hole in every cage. They were, if you don't pay me more, I'm rolling out. I'm just going to quit. And you could just go get a job somewhere else because they were trying to get the work, so they're just paying more, which sends you into this just infinite loop of rate. Well, also, they want to raise because of inflation, and then just people leaving one job to the next. They're trying to tone all that down, which I 100% agree with. And I do think next year we do curb that. As far as do we skate by and not get in a recession, I think I agree with the mild one. I don't think we're getting hammered. I think we'll get by. I think we're a little bit luckier than that. To completely just skate right by, I don't think so. And one more thing, as far as the markets go, I'm going to do another video talking about should you buy tech. What is this? How crazy is that? Not right now. There's a lot of, well, this is not financial advice. I usually have a banner scrolling up the top and bottom. So I don't care what you do with your money. You're ultimately in charge of clicking the buy and sell button. But as to what I'm doing, people love to say dollar cost average. If they don't know any other strategy, it's like, oh, dollar cost average. You can Google it in 5 seconds, figure out what it is, grab a webcam and make a YouTube video and talk about how you just dollar cost average into an index. If you look at the past, It looks good. And your averages do look good. But we are a little bit up there. And we could probably rally for a couple months before we come back down and see some new lows. I don't think next year we're just going to just turn on a V. And most of you guys, you know this is the Rona crash right here. Now, we sent it all the way down. We turned on a dime, and we went all the way back up. That's not normal market activity. That was way too much money coming in. We are going to curb it. We are going to pull this thing over, or we're pulling it back. So we're not out of the woods as far as the markets go, in stocks like that. So if you are going to, what I like to do is a little bit more, I don't want to say complicated. It takes just an extra 30 seconds to explain as far as dollar cost averaging. So I do dollar cost average in some things, and I have a set amount. So it's an automatic buy on Friday, and it automatically puts money into a savings account. So first I'll enter the position, I'll buy an initial amount, and then I turn that on. So I'm going to automatically buy on Friday, and then I'm going to put money in a savings account. So when we dip to lower levels, I take the savings account, dump it in, and that keeps my average weighted down. I find it to be a lot better. If I were to start buying tech right now, which seems to be a popular question, I would actually skip let me just chunk this in right now, and I would just start dollar cost averaging on the weekly, and that's it. I would just be buying my normal shares every week, but with no actual pot already there, because I do think it gets much worse. It has the potential for things to sell off a lot more. So not worried about the bottom just yet, but I'm also not worried about getting FOMO to where I just need so many shares. Kind of thinking more long game as far as that way goes. Anyway, I'll wrap it up here. Let me know, guys, what news do you want to cover? We can go over the economic calendar. We can talk about Feds. We can talk whatever you want. The theme this year has been the Feds. The market's kind of been obsessed with that. And if you haven't noticed, guys, when it comes to the stock market, each year kind of has its own themes. So this year, the Feds. The Feds can say anything and move it. The previous year, we had SPACs. Before that, it was EVs. And then before that, we had pot stocks. Each year's got a theme. And I'll leave you guys with one more note. I don't have an expiring coupon. I don't have all the other stuff. What I do have is some advice. If someone you're following made all their money on Tesla, that's that. That was a once-in-a-lifetime thing. I would not erase Tesla out of their portfolio. Yes, they did manage to buy it. They made the decision to buy it. That in itself took some, at least some kind of due diligence, some kind of decision-making. There's a lot of people that didn't. But there's a lot of people that saw their account grow big. Right? Tesla made a lot of people rich. As I agree, it should have. I think people just got rewarded for it. It does not attest to their ability to do anything. Right now, I used to say there's over 7,000 tickers. There's not even 7,000 tickers. There has been over 100,000 stocks come to this market. Not come to this market and leave, just over 100,000 in general. We're at less than 7,000 right now. So that means over 93,000 have come to the market. They've all heard dollar cost average. It's time in the markets, not timing the markets. They've all heard stocks go up. They've heard it's not a loss till you lock it in. They've heard it all. And then they left. They came and they left. So being a stock picker, there's a reason why I just like the giants. I'm not worried. The world that we're going to live in, where Amazon, Nvidia, Tesla, Meta, Microsoft, Google, they go out of business, we probably got bigger problems on our hands, or a much bigger ticker. So, I do believe, though, the one biggest risk that comes with tech is you do have a tech giant on the throne, and someone's always looking to dethrone them. Kind of like Netflix. Netflix slapped Blockbuster right off of there, and held the throne for a little bit. Got dethroned. I don't think Netflix recovers to what it does. Let me pull up let's just pull up Google. Because I know a lot of people say it's cheap. And I think a lot of you guys, you're delusional. Just kidding. A lot of you guys are referring to the all-time highs. It's going to take some time for companies to grow back into those valuations. Period. That was hype coming in, and the hype left. That's what you've seen in these charts. Come and go, led by any excuse you want to call it. If you want to talk about characteristics of a ticker, this is the Google everyone loves, right? This is a normal growth rate for the Google shares. Most of you guys that are investing, you're just going to buy a ticker, and you hope to capitalize as it drifts up with normal inflation and just typical company growth. Traders are taking advantage of the move in between. But that's your normal just drift up for Google. You can see we clearly got out of hand. The hype came in, and the hype is leaving. So not that I would buy on this trend line, but we'd probably be a little bit better off once we got to this level. So we can go sideways, we can go up, we can go down, we can do a whole lot of things in the meantime. Eventually we can catch up with this and we'll be good. But if you're in here trying to play super trader, you're buying at the wrong time, you're risking probably loading up a little bit too much, making some emotional decisions later as it's down, or you guys aren't picking Google. You're picking something different. I am going to make fun of Tattooed Chef for a little bit because it just keeps going down. Okay? Regardless of your excuse, and I can tell you guys right now, when it comes to stocks, this will be the last piece as far as my opinion goes. When it comes to stocks, everyone's opinion is priced in. Yeah, every YouTuber you're following that pumps it, all his money's in there. There it is. It takes more money to pump this up, more buyers to make that green candle. So you're telling me I'm gonna buy this company, I'm gonna own some shares. Someone's gonna come in and still think at a higher price than I bought, it's a better deal, and still buy it. So you need to capitalize on that. So what is the reason investors will pile into this stuff? Because if all the reasons you know now and it's still selling off, what's really going to change? So anyway, be careful out there when it comes to stock picking. The dangerous part about listening to these guys read you the news and tell you what stocks they're in is you don't know they suck for years. And by then, you've waited too much in there. You've lost a lot of money. You've lost, even more importantly, even opportunity cost. There's a lot of things you really lose out on by doing that. So be very careful with who you pick. I know my investing strategy is a little bit different than all the others, but also, I don't know. I don't have 42 tickers and a million of them red with one Tesla that's green. So I can't stress it enough. Be careful and just remember, someone's got to come in and buy it higher than you for you to capitalize on anything. So why? What edge do you have? What do you think you know? Do you think you found a pocket? Do you think you found the next new thing? And if you can't create that argument, if all you can do is jump in an echo chamber and hear yourself talk again, you probably don't have a real one. If you haven't found the base case, you're in the wrong room. Find another one. Anyway, I'll wrap it up here, guys. Again, I'm going to try to do these daily. Hopefully not this long. But let me hear from you. What do you think about news? It's definitely something new for me. But I'll see you guys in the next video. Now, do all the cool stuff the YouTubers say. Like and subscribe so I don't have to harass you with an FTX link. Just kidding. I'll see you guys.